afternoon, good evening, depending on where and when you are watching me. This is Evaluator 254 with me, James Muli. Thank you very much for tuning in for this another wonderful episode. Your presence is highly appreciated. I thank you again. And if you are watching me and you haven't subscribed to this channel, or it is your first time to be in this channel, now it is the right time to do so. Make sure that you hit that magical button written subscribe, you like this video, you comment down below on the comment section, and also you share this video. Now thank you very much, and you can get into the main business. Now, sovereign bonds, this is actually money taken from the commercial global markets, or rather private investors, or rather money taken from the private investors by a given country. And one disadvantage with these loans is that it comes with high interest rates. It has high interest rates, and we African countries, we are the one who have actually contributed to the hike in the interest rates in those commercial loans. And before you can go even far, I would like to take you back in 2000, because you'll realize this in 2000, in early 2000, the loans, or rather the interest rates of the loans taken from the IMF or the World Bank versus the loans taken from the private investors, or rather compared to the sovereign bonds, their interest rates differed by an average of 0.5 to 1% at most. But now in the recent years, the gap has widened significantly, close to 5%. And still, we African countries, we are still borrowing from the same from private investors. And this is what is killing our African economy. Now, I'm majoring myself on research done by the Institute for the World Economy. Yes, I think that is the name. But in the meantime, the link, because now currently, if you look at the statistics or the figures the way they are, you'll realize that you will realize that the current interest rate is at 6.2%. And for example, taking an example like for us Kenya, the last time we took a sovereign bond was February 14th, yes, this year. And when you look at the interest rate, the interest rate was Kenya offered a whole 10%. Now you need to understand this. Yes, the Kenyan offered 10% interest rates when its actual market value could have been the interest rate in the market was 6.2%. But we have to promise high returns. That is why we have to promise high returns in order for African countries to be given money. Because you need to understand that African countries, most of them, the reason why they have diverted from taking money from the world financial institutions, the likes of IMF and the World Bank, is that they have reached their credit score limit. They have crossed there, or rather, they have existing debts, and therefore it doesn't allow them to keep borrowing when they don't have means on how they are going to service the outstanding debt. Because when you look at the African countries, we have been borrowing since the inceptions of those banks, and we have been borrowing, not paying. So now that's why we have African countries have diverted and started taking money from the sovereign bonds. And sometimes our leaders are very happy when they see that we have had an oversubscribed bond, like we have had, like the case in Kenya. The Secretary for Treasury was saying that Kenya, we have had an oversubscribed Eurobond. In fact, we oversubscribed to the Eurobond 4 times. Do you know why we oversubscribed to the Eurobond? It's because we are offering high returns. Definitely, if we could offer low returns, or rather if we could go to the market value, the 6.2, no one will be willing to place money into an investment which is low risky, which is very high risky and is giving low returns. No one can place money. But since we know we are risky, African countries are risky in terms of debts, we have to raise the interest rates so that investors can come and put money. Let me surprise you by telling you that the Eurobond, or rather the bonds which you hear that they have oversubscribed, we have which are our leaders are here hyping. I don't know, we have oversubscribed to them. Let me tell you one thing. If you check on the statistics well, like for instance in Kenya, we don't make even 30% of the actual Eurobond. We don't have very strong financial institutions, or rather individuals who who can who can put high tickets in those sovereign bonds. So what you find is this: there are the same people who are giving us money, investors from those countries. They have realized that there are opportunities in Africa. They come and place their money. They come and place their huge tickets. We can't flood the Eurobond market. We can't flood it. What happens is that the same people who are giving money, investors from those various countries, also come and they have realized that there's an opportunity in Kenya. They come and place huge tickets. And therefore, who is winning is that they are double winning. Wow. I don't know whether you get it. And to make the matter worse, if the intention, or rather if the money was borrowed in improvement of infrastructure of that sort, very heavy infrastructure, what do? We call those companies, the companies from those nations or other countries, who the same who have given us money, and they come and do the work. After they finish, they take back their money and they go and invest in their country. That is why we'll never. That's why if African countries continue like this, we'll never actually realize industrialization nor any development. The biggest problem we have in Africa is we have very weak institutions. We have weak democracy, and that is and also the rampant cases of corruption. Let me tell you one thing. They have known that it is so hard to steal money which has been given by the IMF or the World Bank, because the money comes with a lot of regulations and a lot of restrictions. No one can touch a single coin in that money. So they have known that, because after the IMF or the World Bank gives money, it does a follow up. If it was building a certain road or an infrastructure, it will come and oversee how is the project going, what is the percentage in terms of completion, but the commercial global markets, they are not interested. They are in business, and that's why and that if you go to them, so long as you have promised them high rates, and so long as you are going to repay, they don't have any problem. They don't care what you have done with the money, whether you have squandered it or whether you have put it into the right use. They don't care, and that is none of their business. So those are things which are killing our economy and which are killing our African countries deadly. And maybe you are not watching me from Kenya, and you are feeling that these problems are associated with Kenya. Let me burst you bubbles and tell you this. More than 50% of African countries actually are spending more on paying debts than in key sectors like education or health facilities. And you know very well, a nice government should allocate at least 20% of it to education. So it means that a lot of 50% of African countries are allocating above 20% to paying debts. 20% of the revenue collection is goes to paying debts, and even some countries it is even much more. Like in Kenya, as they say, I don't know, 7 shillings in every 10 shillings goes to paying debts, of which I don't know, it is debatable because they have not opened those books to the public. No one knows. It is just the treasury is saying that the the hiking in the interest rates in the sovereign bonds actually has increased significantly in the recent years. Because when you look at in the years at decades ago, 2000s around there, in the early 2000s there, you the loan taken from the IMF or the World Bank, those are the world financial institutions, compared to the loans taken from the global markets, or rather the commercial loan, sorry, or rather compared to commercial loans, the sovereign bonds, you realize that they only differed by an average of 0.5 to 1%. For example, if the IMF or the World Bank was issuing loan at a rate of 2%, you'd find that the commercial loans are going for 2.5 or at most 3. But what we have seen in the recent years, and especially now, it is that the interest rates is that that gap has widened. The World Bank and the IMF, they have reduced their interest rates even lower, even lower. L- like for the World Bank, I think it is going for the interest rate is 1 point, I think 3 something 37 or 1.45% per annum, and also there is a 10-year grace period. But with all those benefits, and with the government also has guts to go and borrow money from the commercial loans, which is attracting high interest, and which is misused, and the chances of it being misused is very high. Actually, the loans taken from the commercial loans, I guess from your country you come from, you can attest to me that only 25%, a quarter of it, or even smaller, is put into the right use, or rather is put in the intended use. But they are still borrowing. That the World Bank is issuing, their interest rate is about 1.5%. I've said it is debatable. You'll confirm, as I also confirm. But what I'm sure is now the one for the sovereign bonds is going for 6.42%. 6.2%. African leaders are somehow very, I don't want to call it tricky, but they but they know how to hide things and how to beat around the corners. Because now what they are doing, you'll realize that they are currently, what is happening is that they take loans from both institutions. They take loans from the world financial institutions, or the international lending institutions, like the IMF and the World Bank and the African Development Bank. Yes, or, and at the same time they'll take money, they will take sovereign bonds. And what they have been using, and what they have been doing is this: they take the money from the World Bank, or rather the IMF, which has low interest rate. They use it to pay the commercial loans, or rather commercial debts, these sovereign debts, these sovereign bonds, which attract very high interest rates. And those are the things we need to start fighting with. When the IMF or the World Bank issues loan to any nation, actually, if you go to their website, you can check on it, and you check on the terms of agreement, everything, the terms of agreement, everything, how they are going to service the loan, the amount, and such, and the restrictions are obviously are there. It is very much regulated. But now come to the commercial loans, or that money comes with very few regulations, very few regulations. And also the other thing you need to understand is that the IMF and the World Bank, they are mandated to help African nations develop, whereas these commercial loans, or rather the private bondholders, they are only interested in business. Whether you come and when you take the money, whether you go and do it, what they don't care, that is none of their business. So long as you are going to repay them the amount you have agreed on, you will always get the money. That is why you see that African countries, the taxes are high, there's no infrastructure is pathetic, no cabinet, no ministry is working because because of these things. And for that, I think that marks the end of my video. If you have found value in this video, kindly shoot a comment down below on the comment section, and also don't forget to like this video and you share. And also, in the meantime, turn on the notifications bell. See you tomorrow on the same place at the same time. Thank you very much.